So in terms of the SEC, so I have heard from my own sources, and that I would rather not disclose, but it's independent sources, some of which are within the government.
That's fair to say.
Offices and staff of certain people. The SEC is raising those thresholds. The SEC. So just so you understand what I'm talking about, the way that generally the securities regulations work in the U.S. is you have to disclose. And if you're going to be selling securities and you're going to be advertising it, you got to go public, or you got to be have an exemption for going public. Going public is basically having an IPO, stocks, millions of dollars, disclosures, and all sorts of things.
So this is the type of thing that prevents people from just making deals in the back room without letting everyone know this is a thing that's available.
Yeah. Like this is when you go public and you have like stocks and the Dow Jones and all that stuff. You have to go through that. It's millions of dollars.
Great.
There's most of the private companies go through exemptions. In 2012, they started allowing people to advertise for private deals because of the internet, crowdfunding, and all of that. But there's certain ways that you have to follow certain rules in order to do those types of investments. And one of the key things within those definitions is whether someone should be classified basically as an accredited investor or not. And
right.
what an accredited investor is basically you're now exempt from having to worry about doing a lot of the legwork and transparency things as an issuer when you deal with accredited investors, because the SEC has basically deemed them to be, in reality, rich enough to withstand a significant loss if they invest.
And with that right there, let's just take a step back and explain exactly what an accredited investor is.
Yeah.
And that would be a person who, according to the SEC, somebody who has a net worth of at least $1 million, not counting the value of their primary residence, or somebody who had an income of $200,000 for each of the previous 2 years with a reasonable expectation that they're going to make the same income or greater next year, or that number's $300K if you file your taxes jointly. So when he talks about individuals who are rich enough in order, like you were saying before, that's exactly the threshold of what the SEC means when they determine that, as far as being rich enough. So.
Yeah, and basically the $200K $1 million numbers have been around since 1982. So that's when they were formulated, not pegged to inflation. Very, very important. Not pegged to inflation. So these numbers were put in. It's been a very controversial thing. The first time it really kind of adjusted was after Dodd-Frank. All the financial stuff happened in 2008. There was a law that they added specifically not counting the equity in your primary residence towards your net worth. Why? Because that was a bubble having to do with real estate and overvaluation of the primary market. So they wanted to make sure that people weren't, which they were, utilizing their primary residence as the way they'd verify that they were accredited, because that was the majority of people. They wanted to stop that from being a bubble there.
And if you wanted to look even more long term than that, when most people file for Chapter 11 or Chapter 7, the one thing that ends up getting exempted is your homestead, right? So I think in a roundabout way, the SEC would see this as, okay, this is going to happen in the future where these people know they're going to be protected. This is the asset. It's also the asset that they're going to be using to get themselves verified. It can't be both. So you can't have it be the one thing you can never lose, yet the only thing you're putting up as collateral as well.
Correct. So that was the reasoning behind that. So they actually just added an extra way to get accredited this past year.
March 15th, right?
Right. It was announced last August, and actually implemented this past March. And it's a frustrating thing because the idea behind it is solid. It's a credentials based. It's basically, hey, we're allowing people to be verified via credentials. And what's nice about it is that they wrote it in a way that you don't have to wait 10 years for the next time that they're going to add more credentials. They've set it up in a way that they can adjust the rules on the fly and add credentials as needed to it. So they've made it flexible for themselves. My gripe with what they did in the regulation is that they hamstrung it from the beginning because of the way that they issued it. The way that they've set up the initial criteria is that you have to be with a Series 60, Series 7, 65, or 82, you have to be licensed with those in order to qualify. Now, in order to actually even take the Series 7, the Series 82, you have to have a sponsor that you work for in order to take those tests. So off the bat, those, unless you're working in the financial industry, it's kind of useless. And honestly, if you're already working for an RIA,
why would you need a Series 67 or 82?
Correct. You're already working for the RIA that sign off on the verifications. Series 65. Series 65 is a really interesting test because you don't need a sponsor to actually take the test and get the score. The problem is, and what we originally thought was the way that they were structuring it, is that if you pass the test, you don't automatically get licensed if you pass the test. You actually have to then not just work for an RIA, but in order to work for an RIA, you have to qualify for the state in which that RIA works for, which may be even more cumbersome things. So you have to have some sort of background. There's other things that you have to qualify for the license on top of it just being the Series 65.
Series 7 and 82, whereas
basically
you need to have the employment experience before. With the 65, you need to have it afterwards.
You basically have to have a sponsor after the fact. So then it is just, so for me, I'm not accredited. Sorry, I don't really make that much income.
Oh, so we do need to take a step back and let's mention this before. So eligible verifiers are people that the SEC say that they're able to say that a person's accredited, and then they're able to present what's called a third-party verification letter. So rather than the person who's trying to prove themselves to be accredited, rather than them submitting proof of income or proof of their assets, essentially we'll take the letter from a person, an eligible verifier, and that letter states this person is an accredited investor, and they took the reasonable steps to verify that the person is. Now, eligible verifiers are like actively licensed attorneys, investment advisors, registered broker-dealers with FINRA, and certified public accountants, CPAs. Only CPAs, not enrolled agents. Like, they're able to do your taxes.
Well, that's what, yeah.
But, yeah, so it has to be one of those four classes. So as he was mentioning before, this class of investment advisor is able to say that they are accredited based on having their credentials working in that field. Him being an attorney, he's not able to do that. So despite also being an eligible verifier, this loophole that they created seems to only benefit investment advisors of a certain ilk rather than all the eligible verifiers who've been doing this since the beginning.
Yeah, it's kind of...
This is why he gets annoyed.
It's kind of ridiculous that a CPA that audits,
yeah,
that maybe doesn't have the requisite income, maybe hasn't gotten the net worth
probably just
verified,
got approved. just took the test.
Just not eligible. Probably not eligible. It's absurd. So my gripe with it is that, okay, you're almost there. There's a few solutions. I think one of them is an accredited investor exam. Now, they can make something from scratch and go through the process and do all of that, which I think could happen. And if you wanted to have something that long-term does the job, and you want to have it something where the SEC is directly in charge of it so that they decide the criteria for it, they go through the process, fine. But honestly, the news that I've heard is now making this even more important because kind of circling back to what we were talking about, from my sources, like I talked about at the beginning of this thing, I've heard that it's imminent that the SEC is going to be raising those thresholds from $200,000 for income and $300,000 for income and $1 million to a higher amount. Now, I did an entire analysis on my article earlier today. And the way that I see it and the way I'm thinking about it is, first, the main thing that I heard, and the most important thing that I heard, is that they're going to be pegging it to inflation moving forward.
Finally, right?
So every year, whatever the inflation was, so however much it was that year, the next year it's going to be slightly higher.
Right.
It's going to be constantly, so now it's going to be a constantly shifting thing instead of it. I mean, it's literally been since 1982 a million and 200,000. Like literally, like the amount of the percentage of people I think has doubled in the U.S. that are eligible since that point. Yeah. So my guess is it's an educated guess. And I have not heard what the thresholds are going to be. So let me clear that up. I'm not reporting what the thresholds are, but from my gathering of the information, from everything that I've seen, from the inflation numbers, if you were to backtrack the inflation, I would venture to guess that the new income level is going to be about $500,000 and that the new threshold net worth is going to be about 2.5 million.
Wow. Okay, 2.5 million makes sense for the assets. Actually, just thinking about that. I mean, 25%. Okay, well, forget the numbers for a minute. But when you say 500,000, is that for an individual or also for
500,000? I'm predicting 500,000 for an individual, about
What,
850
750?
or maybe 800, maybe 750 for 750 would be cleaner
I would
for
say
joint, and it would encourage it more. So probably 750. I'd probably say 750.
just based on some of the other stuff?
Just
the
based off
FCC's
of just
come off with,
knowing
like,
how politicians think and make it
literally
simple.
at 750. Just
But
doesn't
it's going to
right.
be ridiculous. It's going to be pointless because it's literally going to
Wow.
be 750 in this, and then the next year it's going to be higher because inflation.
I mean, just based on a lot of the people who come through our site, I mean, that's going to disqualify a
A
lot
lot of people from the numbers that I read. So I did some more research. Turns out there's about 13 million households in the U.S. that are eligible for accreditation.
right now.
Right now, 12 of those are net worth related. Okay,
Yeah.
this change will basically cut the net worth in half in terms of the number of people. So we're at about 10-ish% of the population is eligible to be accredited.
Right.
This is going to cut it down to about 5 or 6%.
Yeah.
Of the population, barring a change to the credentials side of things. Because literally the credentials side has made zilch in terms of a dent. And there's nobody getting verified in terms of credentials. There's licensed professionals that are within that. There's about 600,000 total.
Right.
The vast majority of those are already probably accredited for other means.
Because of income or because of their assets
Correct.
already.
So I mean, we're not really adding that many people to the pot on the high end, and even then, very few of those people have actually gone out of their way to get accredited
now
somewhere.
I'm thinking about that, just looking at the daily numbers for InvestReady, that's absolutely true. I would say
It's tiny. It's a tiny
since
percentage.
March,
Yeah,
we're talking for 5 months now. That's only about 5 people total. Matter of fact, that might be stretching. It might be closer to 4. Less than I can count on both hands for sure.
Not a lot of people.
Yeah,
So,
that's interesting.
it's one of those things where I don't.
Well, they made a change, but to benefit who?
Well, I think that it's like anything else in politics. It's a negotiated thing. So it depends on who's in power and what their priorities are and all that stuff. My thing is, if they're going to raise the thresholds, which they're going to raise the thresholds, guys. It's a Democrat. Look, whatever your politics are, I'm fiercely independent, and I'm not trying to get into politics right now, and especially not in the first episode. But typically, when it's a Democratic administration, they usually tighten the rules in terms of the number of the amount of people that are eligible. So they tightened it with the Dodd-Frank with the other thing. When it's
Right.
Republican rule, it's usually expansion of it in some way. So that's why we had the credentials thing in the prior administration. And then the interpreting of those rules depends on who's in power. So obviously the interpretation of what a licensing and a thing can be interpreted in different ways, and the interpretation came down to actually being licensed.
Right.
So what I think should happen is if they're going to increase the thresholds, I think they gotta provide an easier path for verification and for accreditation through credentials. And if it were me, if I had the decision-making power, if I could snap my fingers, I'd just say, look, just change the wording from licensed in the Series 65 to having a passing score on the Series 65. Anybody could take the test. It's like $400. Anybody in the world can study for this thing and understand it to the point where they're passing it. It's supposed to be.
I'm anybody in the world, by the way.
I mean, really, it's just not. But I'm saying, like, that could be a real solution to. I mean, look, think about all these people that were into the Reddits and the Robinhood stuff. All the people that are out there putting all that time into investments.
And this would be the test to see which of those are going to be really serious.
If you're really dedicated to it,
about
then you put some time into some test prep and
that
study
Robinhood
for this thing and go
was,
for it.
not the actual event, but like the whole app